Talk about what happens here in Vienna. There seems to be a coalescing of minds around a 9-month extension. Is that what the market needs?
I think it does, and I think there is a pathway for OPEC to meet its new external metric, which is bringing stocks down to the 5-year average if demand holds up through the rest of this year and into next year, and if we don't get too much of a supply reaction from the US shale patch.
Is Saudi re-establishing itself as a new form of swing producer?
No, I think it's been playing this role for a long time. I think what has changed between November last year and now is that they have made a commitment to do whatever it takes to stabilize oil prices, and they've introduced this external metric. No more are we going to have unspoken oil price targets. We're actually going to know now, and we're going to be able to measure performance. And I think that that's really important. Of course, you still have a lot of caveats to that, and some of that is that they actually have to deliver the cuts as well, and that will be watched closely by the market.
Bob McNally was with us a little bit earlier on from Ripodian, and he said, look, the low-hanging fruit in terms of compliance has been done because you're able to pull forward your maintenance. The hard work for OPEC members and non-OPEC members really begins today. Would you agree with that?
Yeah, I think it's going to be, I mean, OPEC's been in this position before. I'm not so worried about them. I think Russia is going to be more challenging because a lot of the Russian oil companies have got corporate guidance giving an uplift in production in the second half of this year. It's going to be tough for them to hang with the program, but they apparently are politically committed to doing this, and they want to see oil prices stabilize as much as anybody else.
You know, in economics and when we talk about monetary policy, we talk about QE infinity. Are we at $50 infinity for oil? $26 is gone. Are we at $50 in a bandwidth, 50 at 55?
I think $50 as a floor would be a great success for OPEC at this stage. I don't think we're talking anymore about 60 or higher numbers. They know the problem is with those higher numbers is that it will spark a new wave of supply. And also, it risks a bunch of hedging activity that would put them under pressure yet again.
You mentioned the Russians there in terms of their proclivity, that they may find it hard to hang with this agreement. What do you want to hear from Novak? What do you want to hear from the Russians? Because they agreed to get on board with the November deal, but it took them a long time to get to compliance, didn't it?
Yeah, I get the sense with the Russians that they kind of watch to see whether OPEC fulfills its commitments first before they move. And that's what we sort of saw in January, February. But even in January, they had a lot of very cold weather-related shut-ins that helped them along the way.
The other dynamic is, of course, the story that we have this morning from Trump. And I asked Bob for his opinion on this. I want yours. The special drawing rights, the special reserve in the United States of America, it's not going to really move the dial. It might irk OPEC, would it, in terms of selling 270 million barrels?
Yes,
if it even gets agreed.
I think it would struggle to get through Congress. It does take some of the shine off oil as a strategic commodity, perhaps. But I think in terms of volume, it's really a bit of a non-story. The sales would be eked out over quite a long period of time. It doesn't really have a big impact.
The sense that I get is that we've got this boxing match for data. You've got the IEA on one side saying, stay the course and you will have a deficit by the end of the year, versus OPEC's barrel counters, so to speak, who are going to shake the consensus this afternoon. Who do you side with? IEA will have a deficit by the end of the year, or the OPEC barrel counters, which are very worried?
Well, the IEA is committed to its demand view, which is about 1.3 million barrels a day of growth this year. That has to come in for that forecast to work. And we saw a pretty weak first quarter. There was weakness in US gasoline demand. We have to be sure that that weakness that we saw in the first quarter is not carried through into a trend that lasts all year. We need to see quite a big bounce back in the fourth quarter.
Before I hand back, can I just ask you, the Frackers, they keep coming at 50, they keep coming at 50. Is that what ultimately just keeps an absolute lid on this oil market, the Frackers?
I think that is having a big impact, but I also think that if Libya and Nigeria manage to stabilize their recoveries, that's going to put a lot of pressure on this deal.